Welcome to the Financial Game Plan with Hannah. My name is Hannah Bursajay, and I am your host of the Financial Game Plan with Hannah. I have two super cool guests today. I have Jen and Stacy Conkey. I found them on Facebook. They did a Facebook Live thing about a complex that they had just purchased. And so I went straight to their message like, this is amazing. Women in real estate. Just you never see it. I love this. They reached back out. We've kind of gone back and forth. And here they are. So ladies, welcome to the show. Thank you so much for your time.
Thanks for having us.
Thank you, Hannah.
I am super excited. So I want to know everything. How did you get into real estate? Do you have W-2s? Do you tell me about your life? Tell me everything about you that you're willing to share.
Got it.
You want to start?
I'll go ahead and start because usually you do. So I'll get started. So I got started in real estate. My brother came over in 2002 and honked the horn and said, hey, let's go to the store. I need to get some stuff. And I was like, cool. And then 6 hours later, we drove around looking and driving for dollars to do fix and flips. So
I love
spent 6
it.
hours driving around and he said, we're going to go look for this. And I was like, what is it? And then he explained it to me and I was like, oh, bing, that sounds amazing. Let's do that. At the time I had a full-time job. I was an executive at Target Corporation, opening up distribution centers for them. So I spent 22 years in corporate America, climbing that corporate ladder. I really loved my job and I did real estate on the side. So I did fix and flips. I did wholesaling. And then it took me a while before I got into buy and hold. And I started with 2 to 4 unit properties when I did that. But I did it alone for about 12 years. And in 2015, I retired from my 9 to 5 and just went full-time into real estate investing. It was around the same time that I met Stacy, who was already killing it in apartment investing, had her own course, and I'll let her tell her side of the story. But I resigned in 2015 from the whole corporate American dream.
That's amazing. Yeah, air quotes. That's amazing. That's amazing. Stacey, what about you?
So my journey started similar time frame, 2003. It was for me, and I was going to a Tony Robbins event.
I love him.
Yeah, and I totally got dragged there kicking and screaming. I was like, oh my God, it's gonna be so lame. People are gonna be jumping around and it was like the most impactful weekend of my life, at that point. And the biggest message, I was climbing the corporate ladder, similar to Jen, except totally different industry. I was in accounting and I was working on getting my MBA and just trying to climb up to, move into a CFO position. And after going to that event, the biggest message I got out of it is like, this is not the path that you are meant to be on. But I'd already invested so much time, so much money, so much effort in my career at that point. That was like, wait, what? Anyway, so I just kind of started, being on a journey of exploration. Like, what is it that I am meant to do? And I ended up finding out about real estate investing from a financial seminar. They were talking mostly about stocks and taxes. And out of like 4 16-hour days, they had one speaker for an hour and a half who talked about real estate. And the example she gave as she was teaching was like a fourplex. And I was just like, oh my gosh, that makes so much sense. That's so logical. It's my accounting degree, debits and the credits. And I was like, yes, the logic. I love it. And it was that. So out of that whole 4-day thing, the main thing I got out of it is I got to find out more about this real estate stuff. And then I just, ended up buying Rich Dad Poor Dad and going to investor clubs and, just my journey kind of took off from there. And that was 20 years ago this year.
See, now Stacy took the smart route. And what I mean by that is she put her ego aside and she actually went and got educated, got help, got mentorship. And my dork self went out and said, I'm going to DIY. And I got my dad and my brother. We did our first flip in 2002 and sold it in 2003 for a whopping profit of $1,500 after 7 months. And I was like, this is dumb. This is like the dumbest thing ever. I must be doing this wrong. So the whole flipping thing, I learned trial by error before I actually got that into a system that was profitable. So it was a good thing I had my 9 to 5. She actually learned and invested in herself to learn a system where she could invest remotely. So at the time back then, I was living in California. I lived in California all the way up until 2 years ago, actually. And so did Stacy, but there wasn't a lot of profit to be made, So one of the things that Stacy learned was how to invest elsewhere, remotely. So when we started dating in 2015, I was like, what? Tell me more, and I got to date her more because she had a cool system. And we started talking about it. And I was a regional in corporate America where I had 12 different buildings across the country. So I had a pretty cool system for checking in with those buildings, looking at reports and managing things from afar. just checking in on KPIs and performance and stuff like that. So we sort of melded our two strategies together and started acquiring properties together back in 2015. And then she said yes. So we just kept going. We just kept going.
Y'all have brought up so many things I want to talk about.
Okay.
Like so many things. Okay, the Purple Bible. I heard Rich Dad Poor Dad. How did that change your life, Stacey?
The Purple Bible.
The Purple Bible.
That's what it's called. My daughter, my 5-year-old calls it the Purple Bible.
That's amazing.
I love it.
Love it.
God, really, it was the first book I had ever read that was about real estate investing at all. And I got excited when I heard that speaker, but when I read that, I was like, oh my gosh, like this makes so much sense. And I want to build wealth this way, and I want to create passive income. And so it was really about helping me understand like what the game was a little bit more. And then I think that's where I actually read about investor clubs, because I had never heard of that before. So I think it must have been in the book somewhere, because it was shortly after reading it that I joined an investor club that was like in this side room of a library in Sacramento. And then I joined another, and it was through that investor club that I found out about the place where I went and ended up getting my education and making that investment in myself there. But yeah, I think Rich Dad Poor Dad was a game changer. And then after that, I was always inviting anybody that would be willing to play cash flow, because I was like,
oh my gosh.
Yeah, and
we played at my house. I host cash flow game nights at my house, and friends come over and we'll stay up till 2:00 in the morning. I'm in bed by 9 kind of girl. But when cash flow is on that table, I will play, and I want to win. And my goal is to cure cancer, and I'm getting out of the rat race. I love it. I love that board game so, so much. Okay. Another question. Y'all said that you invest outside of your market. I have only invested inside of my market. It's something that I'm working on building myself up to. I'm very my investments are my babies. I'm trying to break that cord a little bit. How do you invest outside of your market and trust the people there to watch your stuff? Like, how does that work for y'all?
Trust really isn't part of any of it.
Okay.
And it's funny because I always hear people say trust but verify. It's very popular to say that. Yes. But the reality is it's really just verify. So Jen and I have put systems into play. It's not about, trusting them to watch the property. We have property managers in every market. So we do a thorough screening before we hire anybody. And it's not like we're hiring employees that are going to come and work for, $10 or $15 an hour. We're hiring professional business owners to manage, to do rehab, for doing inspection, to do everything. So it starts off with a thorough screening and interviewing, and we call many in the market, and then we narrow it down to our top 3, then we pick our top 1. So from there, there's just a lot of checks and balances. Like when it comes to our properties and our property management reports, every month we're reviewing our reports. If we're in the middle of like a value add, we're probably talking to them every week, because what's going on, what's the rehab look like on here, what's going on here. So there's a lot of conversation, and it's just a lot of communication, and then checking the reports. And if anything doesn't look right, like, wait a second, based on how many units are in here, we should have this much rent coming in. Hey, what's going on? Or why is this expense so out of line? And why is this expense higher than it's been the last 4 months? And what we found from that is, because property management companies do have a reputation for tacking on additional
everything.
fees. Yeah, or they could just be somebody did a coding error and charged an invoice to your property instead of somebody else's. So the best thing that you can always do is just review the reports, like see what comes in, review everything, and make sure that it looks right, and ask questions even when you don't have questions, especially the first couple of months, because then they know if they were going to pull anything, they know you're looking, and so you're not going to be the one they do it to. But that's really a big part of it. Is once we find a market, we build a team, and it's usually 3 layers deep. First, second, third choice. Because if the first choice doesn't work out or they screw up, then we already have the rest of our team built. So we
bench strength.
Yeah, exactly. But yeah, Hannah, it's not about trusting anything. No. Everything is verified. When it comes to, like, a good example of that is when we're rehabbing. So we're not doing tons of rehabbing right now. Our rehabs right now are a little bit on the lighter side, but we have done tons of heavy lift rehabs before. And one of the things that we did early on that was a mistake that we learned from, shifted, created a process, and now that's what we teach our students as well, is when you are getting rehab done and the contractor says, okay, I'm done with this, and this, I'm ready for a draw. In the past, I would just, we'll send pictures and let me see, or let me do a video and see, and we would do the draw based on that. We got burned a couple times, and I was like, okay, what else? Like, what can we do because I was trying to verify, but my verification wasn't strong enough. So how do I verify? So what Jen and I decided to do is let's try having our home inspector or our building inspector who originally inspected the property go do draw inspections. Even though the hard money lender is sending their person, that person doesn't work for us, and nor do they know
Right.
what we're looking for. So we started doing that, having our independent inspectors who had no, like, they don't care either way, whether the work's done or not. They're just getting paid a fee to report to us. And that one change just shifted everything. Because if a contractor says, yeah, these 5 things are done, our inspector goes out there and he's like, well, 3 of them are done, but 2 of them are not done correctly at all. And the other 2 haven't even been touched. Oh, good to know. So it allows us to not get ahead of the rehab. So from a control standpoint, that's a really good example.
I think also one of the things that people, when you're investing in your backyard, like I used to, you get emotionally tied to the building and the property
100%.
and everything else, so you start to trip over feelings instead of tripping over numbers, and tripping over feelings actually makes you trip over numbers. So, because it's not very profitable, it's not scalable or sustainable. So I've always just said, Stacy has the best example of this, but like, if you were going to be in need of a rehab and you needed a contractor or you needed a roofer, the first thing you're going to do is go online anyways. You're not going to just stand at your front door and scream for a roofer because they're in your backyard, like that's not going to happen. So if you can do it online to search for that roofer, you're probably going to have a conversation with them before they even come inspect or look at the property, even if it's near you within 50 miles. So then let's just do that and see what happens, and then send them there. And, there's all kinds of new technology like, I don't know, FaceTime, Duo, Marco Polo is a huge tool that we've used for years. It's a video app where you can walkie-talkie each other. Best part about that app, and why I love it, and no, we don't promote, or no, we don't get any kickbacks from them if you use it. But if you use that app, it's a video of them giving you an update on your property. And it's a document ultimately, because now you have a track record of, well, on this day, you said this was going to happen, and I saw that video. And now it's been 7 days and we're still not on track. Like, what is going on? But you can see it because it's there and you have a record of it now. So it's not just a phone call that's not documented. It's actually a way to organize it. And you can have those strings by property and be able to go back and look at them. So we have a lot of systems in place to do that. And I mean, if you're really curious about it, we have a free masterclass that we can just give you the link and you can look at it. So
Yes,
you see the
I'm
more.
Extremely interested. When you brought up the whole tripping over the feelings, which is actually tripping over your numbers, that struck an absolute chord with me. The apartment complex that I purchased, it's 11 units, so it's not ginormous, but I am proud of myself for my 11 units.
Yeah.
But I know every single person's name. I know where they work. I know everything. And some think we're friends. And I'm like, y'all, I love all of you, but I mean, I am providing a safe place to live. I am improving the community, but this is a business transaction.
Right.
So I think that is something that I am having to work on, is looking outside of our market, because I don't really want to know that your mom's brother's baby cat died. I just don't want to know. I want to know that the air conditioner is working properly, or that you've changed the AC filter, or that the toilets are running out. I want to know those things, but that's about it. Can you tell me a little bit about, you said you have a class that y'all teach. Can you tell me about that? I do know I've seen y'all with WowCon. Can you talk to me about all that?
Yeah. So, I mentioned in 2015, when we first got together, I decided, hey, I want to learn about commercial. And she had been doing JVs, like joint ventures on small apartments, and had a course about it, teaching everybody about it since 2010. And she was teaching one-on-one, right? Now, I don't know if you remember at the beginning when I said I had been doing it alone for 12 years. My whole thought was, well, why don't we figure out you can teach people one to many, and then we can have a community, and then they can bounce ideas off each other. Because if we're really going to create something that we would have wanted when we first started, like, let's do it right. And her first thing was like, listen, I want to disrupt the education industry when it comes to this particular topic. I want to provide the best and finest. I don't want to just sit there and tell people what. I want to actually show them A to Z how. And I was like, awesome, let's do that. Personally, I went to so many trainings that I had more binders than doors at one point, and that frustrated me. So we decided in 2019 to take the one-on-one model that she had been doing, and we decided to go one to many. So we launched our multifamily academy. So we have the Remote Multifamily Investing Academy. It's an academy. We treat it, it's exactly like a university. You got to meet Andy and interview Andy. Andy has been He's been in our academy for 3 years. So it's like when you first come in, you're a gladiator, right? Like we're all joined by our warrior hearts, and then we give you your sword and your shield, and you get in the Coliseum and go after it. And that first year, you're just going for it, doing smaller JV apartment deals. Then in year 2, you're learning about syndication. Then in year 3, when you enroll, it's like you're eligible to do deals with us. And oh, by the way, you don't have tuition ever again, and you're just with us for life. So a lot of people want to go in for those full 3 years and go for it, because I'm constantly looking for my 300, which is 100 teams of 3. We teach in the academy acquisitions manager, capital raiser, and asset manager. So I want 100 teams of 3, so 300, to go out and get 2 deals a year. Well, if they did 2 deals a year, that's a lot of deals, right? And all the cash flow coming in on that. And then I want to give back. So we created the academy, one, to teach people and disrupt the industry. That was Stacy's motive. My motive was I want to create a community, because ultimately I want to treat like baseball treats a farming system, and I want to raise all of them to be killers and bring me deals, and we'll go do it together and build a skyline. So it all just started to unfold that way. And now we have WowCon, which is the Warriors of Wealth Conference. And it's just all of us and our warriors within the academy. And then we've opened up 40 seats for the public to come, so that we can all do deals together and just bond and teach people and network. But that's really how it came to be.
The most serendipitous thing ever. Y'all took something that you wanted and you created this community that's inspiring, and it's wonderful, and I love it. I am looking at your WowCon tickets now. It's November, early mid-November, correct? No, 15, 17,
November
something like
3rd through 5th.
3rd through the 5th.
3rd through 5th. Okay,
Yeah.
I'm looking at my calendar currently with my husband to try to figure out babysitters with my 5-year-old, but I really want to go. I'm very interested in this. What made you switch from wanting to do the flips and the single family homes to join her with the multifamily? What was that turning point for you? Was it that $1,500 payout? Was it the fact that you could scale faster? What made that happen for you?
Yes. Yes to all. The reason
Yes.
why is because single family, it's basically you're working another job. So, at that point in time, I already had a full-time job, and then doing flips on the side, I wanted to trade in for freedom, like true freedom. So when she first started talking about how she invested remotely, I thought, well, man, that gives me a location freedom. I could do that from anywhere, and I wouldn't have to be tied to this one town in California going to work every day if I did that. Like, this is before we started getting serious. Then we started getting serious, and I was like, man, this could really happen. And so when the location freedom piece of it, I was like, I want to learn more about that. But then on top of that, there's time freedom with that, because I was already left my 9 to 5. I decided, I made that decision. But being able to invest anywhere in the US from anywhere in the world was super appealing to me, because then I can work remotely. And this was even before COVID. So,
Right.
this was before it was cool to work at home. Everybody just wanted to, and it was like never going to happen, so somebody had to create a pandemic for it. But I learned how to do it before pandemic. And that was my ultimate motivation, and the scalability of it, because the systems that we put in place, I didn't know it at the time, but what I really wanted was the freedom. I wanted location freedom and time freedom. And I knew that eventually I'd get to that level of, FU financial freedom versus being able to just have my cash flow pay for my basics. I wanted it to pay for more. And so I knew that with the systems that we can put in place between what she learned remote investing and what I learned by being a regional and putting those systems in place, we could really put together a system that could be repeatable. And so we did. And that's exactly what we did, and why I wanted to do it, so that we could scale.
That's amazing. What does your life look like now that you have the financial freedom, the time freedom? What does your life look like now versus when you were working your W-2?
Well, my life for 8 years has been pretty freaking incredible.
Tell me about it.
Before, I used to wake up at 3:30 in the morning to a wailing alarm that, when we were dating, went off once, and she was like, "Oh my God, are they bombing us? We've bombed. They're bombing us." And I was like, "No, that's my alarm. I have to go to work." And so it's like,
It's terrifying.
Yeah, I didn't decide to resign until we had been dating for a few months. But it was going off at 3:30 in the morning, because I had to be at work by 5:30. And it wasn't a 9 to 5. It was a 5 to 9. It was a 5 a.m. to 9 p.m. So, and I'm sure a lot of people can relate to that. And it was 4 days a week of very long days, 3 days off, which was nice, that I could devote and dedicate to other things like building wealth. But
Right.
for a long time, it was actually 7 days a week, 6 days a week. For a very long time, it was in the beginning. And that was a grind. So, and now it's like, I don't want to say I wake up organically, but I could if I wanted to. And wouldn't that be fun? But I choose not to, just because I have a morning routine that I'm very committed to following with, you know, how I get my mind right. I'm a peak performance coach and an NLP master practitioner. So I believe in routines and getting your mind into a peak performance state before entering your day. So now it's like, you know, I wake up at 6:30. So does Stacy. Like today we went for a massive bike ride, came back. Our kids are homeschooled. We have a nanny that shows up at 9 a.m., does the schoolwork with them and takes care of them. And we go to our headquarters and we basically work from like 10 o'clock until 2-ish. At 3:30 today, we were just having a meeting with our acquisitions team for a 13 unit. Actually, it's a 12 unit that we're going to convert to 14. And we're trying to just pick up little small properties here and there within a market that we're in. And it's just fun. It's fun because it's not something that we have to do. It's something that we like to do. So we just went off a 2-month road trip in the RV and just took off.
Yeah, our days are all really different. It just depends on like what's coming, like because we have WowCon coming up, so we have lots of meetings with our team because we want it to be like the perfect thing for people, and so we'll spend more time than normal just because we have that coming up. But it's funny because it's been such a long time since like going to a regular job that I think I forget sometimes that's not what we do isn't normal.
It's not normal though. It's been too long.
Yeah. And the thing is, it requires a little bit more, and it requires discipline. And especially in the beginning when you're not accustomed to it, like you're all over the board because you're not used to having that time freedom. But with that time freedom, you need to actually put some structure into it. Otherwise you'll never actually get anything done. But our days are all a little bit different, except for the beginning. We always, start it and we're usually in bed by 10-ish to prepare for the next day. But yeah, it's nice because we did a 2-month trip
all around the country.
Our kids we saw everything. If we want to take our kids to the movies during the day, which we haven't done that in a while, but we might, surprise them every once in a while. We can do that. We just mark off our calendar.
I'm doing it with Five Nights at Freddy when it comes.
Yes, we're ready for FNAF.
Gotta go do the FNAF.
Our kids have been waiting for that.
Yeah,
that is. I keep using the word refreshing, but that's amazing. It's exactly how I feel. So I've told you I'm a school teacher and I love to teach. I don't love what I do currently, but I love to teach. I love to teach about real estate. I love to teach about how to read. I love all that kind of stuff. But when my daughter has a Christmas party, I want to go to her Christmas party. I don't want to be doing the Christmas party for my students. I want to go to her party. We are planning a big road trip as well. We love camping, and we're planning a big road trip this coming June. We're going to do Yellowstone and the Grand Canyon. I've been to both, but my husband has only been to one of them. My daughter is 5, hasn't been either, but she's obsessed with animals. So I'm very excited about that. But I worry, I'm like, okay, well, I'm gone. Oh my gosh, like, what if something happens at the complex, or what if something happens to one of my houses? I do worry about these things. Earlier, y'all spoke about having a team. What does a team look like for y'all? Like, what are the layers of that?
So when we go into a new market, we always start by the first person on our team that we will start reaching out to is realtors, because realtors are the source of our deal flow. There's 100 different ways you can find properties, but the reality is there is one way that is the absolute fastest, takes the least amount of time, least amount of effort, and that is realtors and brokers. So we will always first start having conversations to see whether the market is even going, I have to say, I don't want to sound so weird, but they see whether the market chooses us, because we might select 3 markets and be like, let's just see what we can find. And we might have a student who's in the same 3 markets, and we'll do we teach them our exact system. So they're doing the same thing that we're doing. And for whatever reason, like in one market, we'll start getting deal flow and they're getting crickets. And then in another market, they're getting deal flow. People are calling them back and we're getting like nothing. So that's why I believe sometimes the market also chooses you. But we start off with realtors or brokers to make sure that we actually can create deal flow before we build the rest of the team. And then after that is inspectors. So depending on the size of the property, a home inspector or building inspector, so that when we get something under contract, we already know who our, number 1, 2, and 3 go-tos are. If we're going to be doing rehab projects, we look for general contractors, and then property management is without a doubt probably the most important. They're all important depending on what strategy you're using, but those are the core people. I mean, you also have title company, insurance.
Yeah. And those are the teams for when we're going into a market and acquiring at a higher level for us, because that's how you get started. And that's what we teach. And once you continue to scale up, like we have 5 pillars that we always try and teach that you have to manage constantly when you're running a multifamily business. And Eventually you will get to the point, Hannah, where you just have an acquisitions team,
Right.
that you do the due diligence and make sure, and you're watching, but they're the ones that are acquiring those deals for you. And you might also have an asset manager that's managing it for you. And that asset manager is managing the property manager. And all you're doing is meeting with your team. So the team we were meeting with at 3:30 is an acquisitions team in one specific market that brought a 12 unit up. And we're all talking about, well, what's the plan for that? And then they go deploy that based on what we were talking about. But they know our system that Stacy just mentioned. Like, they reach out to realtors and brokers, get the deal flow coming, and they analyze all that using our systems and the whole blueprint. So that's why the academy serves us so well, is because they learn it based on what we teach in our online learning platform. Then they go do it. Eventually by year 3, they can send them to us. And now we're all doing deals and stair stepping, so there's like so many layers to it and where you can go.
Looking in a market and you're looking for a purchase, what does your buy box look like?
So what?
Value add. She's going to say value add, and I'm going to say stable.
I wasn't actually going to say that, but that's actually a good point. Well,
hybrid of the two.
Yeah. So it's funny because we have always like differed on that. Jen's all about stabilize. I'm all about value add.
Not right now, I don't.
But yeah, value adds. But anyway, it depends on what you're doing.
It shifts, just so you know, our buy box shifts.
Yeah.
Okay.
So yeah, generally the thing is we've done just earlier this year we did a 96 unit. So we do every different size unit. Our sweet spot, I'd say, is between like 15 and 35 units, primarily because we haven't even talked about this yet. But one of the positions that Jen and I have taken very publicly, which sometimes can seem a little divisive or a little in people's face, which it's not our intent, but our intent is to get the truth out too. A lot of commercial education companies will talk about syndication because everyone's concern is, well, what if I don't have enough money? Everybody has that concern. Even if you have money, you're going to run out. You can't scale with your own capital for most people.
Mm-hmm.
And what I don't love is that the easy answer always like, oh, you don't have to have the money. You're just going to syndicate. Well, that's BS. You are not going to syndicate when you're brand new. You're never going to close a deal ever in your whole life. And that's crap. People should be able to actually legitimately find property, do proper due diligence, make sure it's good, and be able to close on it. And my belief that by people being led with, oh, you could do syndication, it's very rare that someone can ever close a deal if they've never done anything in real estate.
Well, without a sponsor and like the SEC and PPM, all that stuff, which is very costly. There's just so much red tape and complication that it does. It makes it like,
yeah. And so it's not,
people give up.
Yeah, it's not impossible, but it's like the barrier of entry is so high because then you have to get a sponsor to even agree to work with you. Well, they're going to want to know what your experience is. Well, I have no experience. Well, then they're not going to sign the loan documents knowing that you can run the property into the ground. So my whole thing that we've been very public about is, look, syndication's awesome. We do it. We do syndication. But if you want to actually be able to close on property and learn and get to the big properties, it's okay to start with something small to learn it. Start with something that's 5 to 15 units. Like, that's why I'm like, 11 units is perfect. Yeah. Because look at how much you've learned from, it's crazy. Like, you learned so much that first one. And now you're in a position where you could probably pretty easily go up to 20 units. And then you do, something that's in the 20 to 30, and then you can easily double it. So by getting that experience on the smaller ones, by doing joint ventures, it allows you to do a handful of deals, and then you're positioned to do syndication, because then it's not such a big learning curve at that point. It's still a steep learning curve, but at least apartment investing, and you're not trying to add that on. So the whole joint venture thing, we really want people to understand, like, it's okay to start with something small and learn it and have a couple of partners. Mm-hmm. You guys do the deal together. Maybe they put the money in, you're putting some money in, and you do the deal together, and then you do the next and the next. So anyway, I can't remember what the original question was. Sorry, I got all passionate.
Our buy box.
Our buy box. Okay.
So right now, based on economic conditions and, people being a little bit tight with putting capital out there and a little unsure, we're going for seller finance deals that are within the 10 to 35 range and the price point of 6 to 9 million. And we're trying really hard to just leverage seller financing in every single situation. So the 96 unit with seller finance, the one we were just looking at today is seller finance. There's another 71 unit that one of our acquisition managers is assessing and underwriting right now. And then another team has a 30 unit. So,
and you're finding those seller finance deals through the brokers?
Yeah.
How are you finding those?
They relationship
Yeah.
building over the years. We have a lot of brokers that'll be like, hey, here's off market deals, just because of our relationship and closing for so many years. And now our students are realizing the same exact thing because they've been closing on deals. Brokers are seeing them off market deals versus the ones that are not penciling out for everybody.
Because they actually closed.
Yeah.
Because they did something that was, that was doable. That was more manageable with a couple of people. They could fund it instead of holding out for 100-unit building as their first one. You're never getting off market deals from anyone because they're like, well, I'm not going to give you my good stuff. I don't even know if you can close.
Right. Why burn my calories?
Yeah. So our students, us, it's just through the relationships built and showing people like, look, we do what we say, we do what we say we're going to do. If we put it under contract, we're going to close it.
So it feels like your philosophy definitely leans toward that anybody can do this and anyone should be able to do this. Is that correct? Because that's my personal philosophy.
1,000%.
It's 100. Yeah, I was going to say 100%. 1,000% is even more than 100%.
I am absolutely certain. And I think the reason, because we teach it where you learn everything, right? We have anytime somebody enrolls into our academy, they get the online platform and they get it for life. Like you always have that. It's so much better than a binder that falls apart, by the way.
Yes.
So, and we're always updating stuff and putting new trainings and doing all those things. And so when people are in there, they learn the whole thing from A to Z. Then when they come to a WowCon event, I lead an entire 4-hour period of let's figure out what is your lane. Like, what are you best at and what do you love doing? And then it's kind of like Harry Potter with a sorting hat. You're either an acquisitions manager or you are a capital raiser or you're an asset manager. Once we get through that process at the event, then I separate the room and we do speed dating, right?
Wow.
So all the asset managers and capital raisers, we're going to break you up, go over here, you interview each other. And then half of the capital raisers and acquisition managers, you go over here and interview each other. And then we switch, so everybody can get to know each other. And then all these relationships are formed during that event. And then when they leave, there's like an average of 25 deals that are done. And we do these events quarterly. So every quarter when people are coming in, they're forming these relationships, they're going and doing JV deals, and then they do more and more deals together. And eventually they get into deals where they're like, okay, we got to syndicate now. So we stair step it. And the reason why we do that and why it's so successful is that we teach people A to Z, but then we get you into your lane where it's not going to be a lot of effort. You're going to love it. You're going to have fun and you're going to meet with people and form relationships that actually kind of round you out, for a lack of a better phrase, so that you are truly doing it as a team versus doing it alone. I don't know if you realize, but I still have PTSD from being alone. I may or may not have abandonment issues.
Everything that you are saying makes total sense. I know that I went to the Best Ever conference for Joe Fairless this past March, and I met with Matt Faircloth of the DeRosa Group. And he was like, oh, you are the money person. Go make friends. You are the capital raiser. But it gets lonely. It's hard if you don't have other people to go talk to. I'm from South Louisiana. I'm from a small town in South Louisiana. And if you're not with people who are like-minded, it's really, really hard. I believe it was Stacy, you brought up the Investors Club. Is that what you called it at the beginning of the episode?
Yeah.
Okay. Can you tell me a little bit more about that? Is that the local meetup? Is that what that is? Or is it something separate?
No, that's commonly, meetup had just started a couple years before I started doing that, but it could be a meetup group because meetup is more about the marketing of it, but it's where somebody organizes an investor meeting and they'll usually be like a speaker or a topic, but people will go meet in a place. It could be at a restaurant, it could be at a hall, it could be at a library, and they facilitate networking. People get to know each other, and then there'll be a speaker that teaches on some kind of topic, and then networking. Sometimes if it's a bigger one, there'll be like vendors and sponsors and things like that. But for me, it was just an opportunity to go out and start trying to learn whatever I could and meet other people. And the thing that I found really interesting, which is what started the whole joint venture thing, is I didn't have a lot of capital when I started. Actually, when I say a lot, I mean any. I really didn't have any capital. My credit wasn't that great. But what I found is, I had eventually gone and got educated. The education wasn't very good, but I did get educated. And so when I go to the investor clubs and I'd be having conversations with people, I found that me, the one who got the education, was like, I was highly sought after by the people that had money, because they were like, oh, everybody there wanted to do a deal. That's why they were there. They wanted to learn about investing so they could learn how to do it. But in a million years, you will never learn enough at an investor club to actually be able to do it. It's just, it's a very hard thing. I should say never, but it's not intended to be like a complete education. So when I would be networking and talking to people, I found that they were like, wait, so you're doing it and you're doing it remotely? And I would be like, yeah, I was not very much further along than they were, but I was a little bit further along. And they were like, well, maybe could we do a deal together? And I said, well, I'm always looking for a partner who can put up the capital and I'll do all the work and then we can split it 50-50. Now it turns out I found out much later that with joint venture, everyone is supposed to have some kind of active role. So, their active role was
So don't do that.
doing the minutes or something. But that was where the whole joint venture thing really came. And as I grew and started doing like bigger properties, I had more relationships. It was easier to find people because I had credibility because I'd already been closing some deals. But in the beginning, I was like, well, who would do a deal with me? But people have money and they don't have the time or they don't have the knowledge. Well, if you're the one with the education and you're doing it, or you have the experience and you're doing it, that money is attracted to you because they don't know how to deploy it or deploy it safely.
I am with you 100%. I'm a huge person of the law. We call them our local meetups. I go to several of them every single month. I'm a big conference person. I feel like my most authentic self when I'm at a conference talking about money with other people. And I absolutely love all that. But like you said, I remember in the beginning when I went and I didn't know anything, I was scared. I didn't know what to do. I didn't know what to say. I didn't know how to do it. But now that I have several deals under my belt, people do come up and talk to me, which is a really cool feeling. I absolutely love it. Well, look, ladies, y'all have been amazing. I don't want to take a ton of more of y'all time, but I do have a couple final questions to ask if y'all are open to them.
Sure.
Awesome. So my final 3 questions, my first one, and either one can answer however you want to do it. If you had 1 year left, what would you want to accomplish on your bucket list?
I'm going to take this one.
Okay.
Because I'm working on it now.
Get it, girl.
Like you, I'm a capital raiser. I'm actually in the Hunter Thompson's Raise Master Mastermind.
Oh, okay.
So for me, I want to start a fund of funds. Special purpose vehicle, something that is a fund of funds. I don't know anything about it. I almost said a bad word. I don't know anything about it. And I want to know. I'm learning so many things about it right now that I'm like trying to piece it all together. But within 12 months from right now, I will have my fund of funds.
I fully support you. But for my listeners who do not understand what that is, can you tell us what that means in the simplest of terms?
So it's where I can go out and I can raise capital from accredited investors and get their money so that I can have deals that I place that money in and invest it for them in my deals with my students that are learning how to acquire them. That's in a nutshell, high level.
Fantastic. I love it. Second question. What is a skill that you have always wanted to learn?
A skill. Wow.
I know mine, but
you go ahead. You go.
I want to go scuba diving. Like I want to learn how to do scuba diving so bad. And I've always wanted to do it. So it's on my bucket list to go do, but I want to go diving and I want to learn it with the scuba, but I also want to learn it with just a snorkel.
Okay. You want a free dive. Very cool. I am not into that at all. That terrifies me. I can't, but I wish you all the luck with that. Last question. If you could go back in time and talk to your 18-year-old self, what advice would you tell yourself?
I got started earlier than a lot of people get started. So I'm grateful for that. But I was, 28 when I got started in real estate. And I wish that at 18, instead of being focused on, going to college so I can get the degree, so I can get the job, I wish I would have known about this whole world of being an entrepreneur. I just had no clue that it even existed until I was 28 years old. And at that point, I was so deep into my education and career that it was, it was hard to just leave all that I did. But what I would have told my 18-year-old self is, I wouldn't have said don't go to college, although I don't see a ton of value in it right now based on like how to make money in the world. But
right.
I would have said, you know what, if you want to go to college, cool, go for the experience, but start a business now, because you're going to learn so much that's going to serve you later. Because that first 5 years being in business, everything was new and it's super stressful because you don't know anything. You don't know what you don't know. You're used to being really good at whatever you have been doing. And now you don't know anything. So like to start that earlier when you are more inclined to just go for stuff and not so worried about making mistakes. And you have fewer responsibilities when you're young. So that's the main thing I would tell myself. It's like, just go for it. Like you got nothing to lose. You're 18, like start a couple different businesses and see what sticks. I think that's the biggest one.
Yeah. I agree with you so much, especially on the college part. If you're going to be a doctor or a lawyer or an engineer, I understand. But in this world, you don't need a college education to make the money. And as a teacher, I get so frustrated with people who are pushing these kids who are not on that track. And it's okay. They don't have to go to college to have a super successful, fulfilling life. Entrepreneurial, I wish I was just not doing stupid stuff when I was 18. And I wish I would have failed so much harder because, like you said, you don't have any money at 18 years old. So what if you fail? What's the worst that's going to happen? I got to ask my mama for gas money. Like, it's a
Yeah.
lot easier than now when I can't buy clothes for my daughter if something happens, right? So I love it. I appreciate it. I think y'all are fantastic. Ladies, how can people reach out to you if they want to learn more about you, more about your mentorship, your classes? How can people get in touch with you?
Two ways, honestly. We have our book that you can get on Amazon. It's the Multifamily Freedom Hacking, your playbook to, what is it? Long-term cash flow with rental properties. The best way though to get access to us where we're in there every day is our Facebook group, and it's Apartment Investing with Jen and Stacy. If you just go and search for that in Facebook, you'll find us right away.
Again, ladies, y'all have been amazing. I have appreciated everything that you have done. Thank you so much for your time.